Baltic Capital Markets Chief Investment Strategist joining us now. Welcome back, Kathryn. You see a world in front of you that you say has been progressing towards this kind of narrative for a while. You reposition for it. My question is, do you think the rest of the market is now behind the curve?
Yes, we repositioned for it 1 year ago. It was a combination, Guy, of both an opening of the spigots from the fiscal side. Of course, the monetary side, we had spigots open for the past, more than a decade. But then the reopening trade and the bottlenecks that we've seen in the supply chain have exacerbated what we have foretold would be an inflationary scenario for 2021. So yes, our inflation attached calls have done very well. That was long commodities, that was long industrials, materials, financials, and energy, which are, Guy, the sectors that are most benefited from an inflationary environment. So now the question is where to from here, right? So I think for the first half of next year, we should continue to see inflation trending way above the target of 2%, which we, of course, now know is an average rather than a specific target for the Fed. And we're holding our inflation hedge positions, and we're looking for rate-sensitive sectors as well. So we have materials, financials, energy, industrials, and in fact, staples as well on the overweight list.
Talk to us more about some of those rate-sensitive sectors. We're looking at 5- and 10-year break-evens at 16- and 15-year highs. But I am curious, and you talk about stocks being a good inflationary hedge, but is there a point when we start to react to some of the higher yields if we get those?
Absolutely, and yields are, of course, going to continue to trend higher as we see both higher inflation and a Fed that's more likely than not going to hike. Hopefully they hike by the second half of next year. So we are still overweight equities at this point. Underweight fixed income in general. We do have an allocation that we've been promoting for some time to Bitcoin, which of course is also an inflation hedge and has a really nice correlation with the depreciation of the US dollar. But look, I think a lot of us are expecting yields to go higher. I think a lot is already baked into prices, Taylor. We know that the Fed is more likely than not going to taper in a few days' time, in about a week, and end that by the second half of next year. So the question is, maybe the Fed is behind the curve, right? So then we get into the question of stagflation, which I think is not a risk that we need to completely discard for 2022. And in fact, the following year, if the Fed loses additional credibility and perhaps doesn't do what it needs to do ASAP, I think that could be that could precipitate the next correction. So it really is on the Fed, Taylor, to do what it needs to do.
Kathryn, if I'm selling bonds and I'm selling credits because I'm worried about the interest rate risk and I'm not really interested in Bitcoin or crypto, what do I buy?
I think you need to have an allocation, as I said, overweight to equities. We're still in a risk-on position while the Fed continues.
Within equities, though, what am I buying? What do I do to provide some balance within my portfolio? Normally that would be provided by bonds. But I need something bond-like in my portfolio. Where am I going?
Understood. Yeah, I think you need to be in the higher dividend stocks. Of course, that would give you what you're looking for. But bond proxies, even utilities, I wouldn't be recommending at this point because of that interest rate phenomenon. So I would certainly say go into the higher dividend, the value, increase your allocation to staples or, to equity sectors that can give you sort of that higher premium and maintain a position in fixed income. We're not saying go whole hog and go into an aggressive portfolio, but you should be overweight equities at this juncture and underweight in general.
Kathryn, Guy said that he wasn't going to be in Bitcoin, but what he might not know is you're in Miami, and maybe we're going to be calling that Bitcoin capital, at least for now. Peter Jones saying that Bitcoin might be a better inflationary hedge than gold. Do you agree?
Well, the market agrees, right, Taylor? Because gold has suffered, has been a detriment to, Bitcoin has been horrible for gold, basically. That's what I'm trying to say. It's taken the luster from gold, and Bitcoin is, in fact, an inflation hedge, and that's something that we've both been saying for some time now. There is a correlation with the depreciation of the US dollar. So I do think that Bitcoin should have a place in an investor's portfolio within that alternatives portion of his or her portfolio. So yeah, you should be in both, really. I think gold has a place and Bitcoin has a place in investors' portfolio.
Kathryn Rooney Vera of Baltic Capital Markets, thank you.